This is part 3 of the business decisions, and this one looks at whether Athletic Equipment Limited should drop a product line. So here we're given the data for their two products. They make bikes, exercise bikes, and treadmills. So you're given all the information. So the first thing we want to do is look at the decrease in sales revenue. So if you drop the bikes, you're going to lose $100,000 in revenue. But of course, you're also going to avoid the variable costs, so reduce the variable costs by $50,000. So you're going to decrease your operating income by $50,000. And you might think that you should do it because it might appear that you're losing money. But the thing to be aware of here is that your fixed expenses are going to be there regardless, unless you're told otherwise. So at this point, you should not drop the bike product line because your fixed costs are not going away. So in fact, you're only going to increase your loss here if you decide to drop the bike product line. The next example we want to look at with the same product is, what about if you're told that you can reduce that $50,000? If you can save some money, you can save $20,000 of that by dropping the bike line. So now we look at the same scenario again. For $100,000, you're going to no longer have that revenue, but by the same token, you're not going to have your variable expenses of $50,000, plus you're going to avoid $20,000 in expenses. So now you have a decrease in operating income of $30,000. So it's still not advisable to drop the bike line. So that concludes the example of dropping a product line.